Hello Dairy Today viewers. On behalf of the Market 360 advisory team here at Stewart Peterson, I'm Tom Mongovid, and this is your week in review for the week of January 25th, 2013. Let's take a look at our CME dairy components. A lower cheese trade this week with blocks down 4 1/4 cents, barrels down 6 1/2. Butter and non-fat dry milk were unchanged this week, and whey was slightly higher. The February milk contract settled lower for the last 5 trading days, and that dragged other months lower this week as well. The milk production report that came out earlier this week probably contributed to lower prices also. Let's take a look at the changes on the week. January is about to expire. That was up a penny to close at 18.12. February was down 26 cents this week to close at 17.02. March closed below the $17 mark at 16.95, and the 2013 average settled 14 cents lower to close below the $18 mark. The block barrel average finished lower for the 3rd consecutive week. It seems like every day for the past couple of weeks a seller has entered the market and caused things to drip lower and lower. As you can see from the chart, there is a distinct channel forming, but it is important to keep in mind that our CME price is now below Oceania's price by about 20 cents. This is lower than the 15-cent average discount we have seen over the past 6 years. Here we have a chart of second month milk on a weekly basis. As you can see, similar to the cheese chart, there's a distinct channel forming to the downside, but the oversold condition of the charts may lead to a temporary bounce in the short term. It seems like milk is testing some of the lows from back here in late September. Dairy cow slaughter for the week ended January 12th came in at an all-time high of 72,500 head. This comes off of a 4-year low seen in the week prior. It seems like this number may be compensating for the last 2 weeks' lower numbers, which were over the Christmas and New Year's holiday. Year to date, dairy cow slaughter is only trending 2,800 head higher than 2012 numbers. In this week's milk production report, the USDA pegged 2012 milk production at 200.3 billion pounds. This is the first time over the 200 billion pound mark and 2.1% greater than the 2011 numbers. In December specifically, production came in at 16.8 billion pounds. That is 1.2% greater than December of 2011 and 5.1% greater than the prior month. Taking a look at the year-over-year changes in the last 3 months, you can see that the trend is calling for higher production, which could weigh on the market. The U.S. dairy herd grew 16,000 head to 9.213 million head in December. In spite of high 2012 dairy cow slaughter numbers that we have seen as of late, the U.S. herd size now totals only 10,000 less than it did in December of 2011. In California specifically, the herd size dropped by only 1,000 head in December and stands exactly where it did in December of 2011 at 1.8 million head. These numbers indicate a large number of replacements because the high slaughter numbers do not point to an increased herd size. Looking ahead to next week, there is not a lot in the way of fresh news coming for either the feed or the milk markets. The U.S. will release an updated unemployment number next Friday morning. That will do it for us. On behalf of the Market 360 team here at Stewart Peterson, thanks for watching and have a great weekend.